What's going on, YouTube? Welcome back to Fleetwood Trades Crypto. Tonight, I made a trade on Bitcoin. I'm going to show you that trade. I'm going to show you all the reasons why I entered, all the confluences I look for to get together so that I can confidently enter a trade, and let you know exactly what I'm risking as far as risk-reward ratio and risk management. So with that being said, we're going to hop into the charts. We're going to look at Bitcoin. We're going to take a look at the Bitcoin perpetual futures chart. And this is based off of MEXC, but you can get perp charts for any trading avenue you use. I don't even use MEXC. I just like the chart for it. It stays pretty close to what I trade when I trade on Jupiter. So I'm looking at the hourly time frame, and on the hourly time frame, you can see we've been in a pretty good uptrend. And actually, you can make a trend line here if you wanted to, and you could, actually it would look like we've fallen through that uptrend. So that's why I don't use trend lines all that often. I could be wrong. This could be a false break. It could be retesting and going lower. So, but just to give you a heads up, I'm going to show you what I'm looking for as to why I took this long position. Again, uptrend. We had a strong move here. This was Friday. Had a strong move to the upside on the hourly time frame. Strong move up. Made displacement. What is displacement? That is when you make a fair value gap. This first gap here. There's another gap made right behind it from here to here. But this is an area where price is buy side only. It's a buy side imbalance. There's no sell side to balance everything out. So price wants to come back and balance this price range. Look what happens. Price comes down, wicks all the way through it, and we close here. And I entered right at the top. Honestly, I was a little late on my entry. I would have preferred, it would have been a lot nicer if I could have gotten here right at the open of this candle. But I missed it by a couple minutes. But anyway, I'm in. And right now my stop loss is less than 0.5%, 0.47%. But why did I take the trade here? It wasn't just a fair value gap. It wasn't just that it was testing this area of support and resistance here. There's resistance, broke out, came back, popped through it. This is a fake breakdown. By the way, this was definitely a fake breakdown. This was definitely a liquidity grab, and within internal liquidity, a fair value gap is going to be internal liquidity. And we have this deep oversell. So we're deeply oversold on the hourly time frame. The hourly time frame came down to a fair value gap. It took a liquidity grab off of previous resistance. And we have this previous swing low here, and an RSI swing low to swing low as a higher low, and RSI made a significantly lower low, which means that the bears had to push that much harder. They had to push that much harder to get price down to make it low, but it was still a higher low. So there's a hidden bullish divergence. So we have hidden bullish divergence. We have a fair value gap. We have an uptrend. We know we're trading with the direction of the market, and it just looks really, really good. So with that being said, I took a small amount of my trading bag. I put about $200 on this trade, actually about 140 bucks. I'm just totally honest. $140 with 80 times leverage. Now, with 80 times leverage, that puts me at like a 40% risk on this. And what I'll probably do is I'll probably just let it trade to liquidation or take profit, because I'm not worried so much about the risk management of the trade itself as in like a 1%, 2%, because I only am risking a small portion of my bag. If I had my whole bag in this trade, I would just drop the leverage down to maybe 5x leverage. And then in that case, 5x leverage would be about 2.5% risk. And I'm fine with with risking 2.5% of my trading bag. I'm fine with that. That's not a problem at all. I typically like to be between 1 and 2%, but I would do 2.5. That wouldn't be bad on a trade with this many confluences and that I feel this confidently in. So, that's the risk management for the trade. There is no risk management after I entered the trade as far as stop loss, just simply because I'm only risking a small percentage of my actual trading bag. So there's multiple ways you can do that. You can trade any position to liquidation and only put a small amount into it, or you can put a larger amount into the trade and set a stop loss with a 1 to 2%, and that's how you would manage your leverage based on how much you're willing to risk. So with that said, guys, that's the whole video. I hope you see this and I hope you get something from this. If you enjoyed it, please hit the like button, subscribe to the channel, all that good stuff. I can't wait to keep bringing you more videos like this. It's just not often I get to see a trade happen, take the trade, and then have the wherewithal or have the time frame to actually make a video while I'm doing it. So hope you enjoyed. Until next time, peace.